G'day everyone, it's Engelo Remora here, your favorite Australian and the real estate dingo, bringing you another awesome blog. And today I'm going to ruffle some feathers. Why? Because I'm going to be talking about why you should never invest based on capital appreciation and why you should only invest based on cash flow and by looking at the numbers in the deal, only looking at the numbers in the deal. So let's get started. So it's quite simple, guys. You should never base your investment decisions on hope that a property is going to go up in value. And this is a mistake that I made back in the day while I was still living in Australia. And a lot of investors have made the same mistakes here in the US on the East Coast and the West Coast before the global financial crisis. They were buying high, hoping that these properties were going to appreciate in value so they can sell even higher. Guys, hope is not a strategy. Hope is for those that are in hospital right now dying from terminal cancer. So you can't use hope as an investment strategy. Capital appreciation is a prediction. It is speculation. No one has a crystal ball. No one can predict the future. Nostradamus died a long time ago. So you can't predict what's going to happen in the next 10 minutes. How the hell can you predict what's going to happen in the next 10 months or 10 years? Guys, forget about it. Forget about including capital appreciation statistics in any of your calculations. Now, this is the only way I suggest you base any type of calculation on capital appreciation. I personally bought a property next to Toledo ProMedica Hospital. Now, I knew for a fact that Toledo ProMedica Hospital is buying in the area because they want to expand their hospital grounds. So I was speculating that they are going to knock on my door 3 years, 5 years, 7 years down the track and buy the property for much more than what I paid for it, okay? Call it insider trading if you want, but that is the only way that I would speculate on capital appreciation in real estate. So pretty much what has happened is ProMedica indeed did knock on my door and they're willing to pay 4 to 5 times of what I paid for my property. Other than that, guys, forget about capital appreciation. Forget about including any kind of capital growth in your projections. You really have to look at the numbers in the deal as they stand today. So what is my purchase price of that particular property? What are my expenses? Include a margin of safety, meaning underestimate your income, overestimate your expenses. If the bottom line meets your end goal, meaning that property, if you buy it and add it to your portfolio, is it getting you a step closer to where you need to be? Cash flow wise, guys, we live off cash flow, not of capital appreciation and equity. You can't put your hand in equity and go out and buy freaking McDonald's. You just can't do that. While you can put your hand in your account every single month because you're getting rent, which is cash flow, and use that money to go and buy a McDonald's. So forget about capital appreciation. Focus on cash flow. Look at the numbers in the deal. Make sure that those numbers suit your end goal and every property you buy is getting you a step closer to where you need to be. For all of you doubters out there that are going to say that rents can sometimes decline, thus causing the numbers in the deal today not to be true. That is BS. The numbers in the deal as they stand today are always true. It's not a prediction. It's not a speculation. You know what the numbers are. You know what the expenses are. You know what the rent is going to be. As I just said, include a margin of safety. Underestimate your income, overestimate your expenses, and then make sure that those numbers work for you and what you're looking at doing. Guys, rents declining. I have never seen it in my 5 years of real estate investing, and I've got other entrepreneurs and business mentors on board that have been in the game for 20, 30 years, and unless something drastically, ridiculously crazy happens, like a nuclear power plant blows up, rents just don't decline. They never have, they never will. I've personally never seen it. I've personally never heard of it. So it is my opinion that you guys are safe investing based on the numbers in the deal as they stand today, just to make sure that those numbers, that cash flow, the cash flow suits you, suits your end goals, and suits where you want to be, and suits your lifestyle. So that pretty much concludes my blog for today. I hope you enjoyed it. Guys, I want to ruffle feathers with this one. I want your comments. I want your critique. Bring it on. Bring the heat. I love it. Comment below. Thank you so much for watching. Once again, I'm Engelo Remora. I'm your favorite Australian and the real estate dingo. You guys have a great day.